Good evening and welcome to BizTech's Personal Finance Show. Today, our focus is on helping you understand the basics of insurance so that you will be able to make sound financial decisions to buy what you really need. Now, here to give us the 101 on purchasing insurance is our guest today, Felix Neoh. He's the Director of Financial Planning at Finwealth Management, Sdn Bhd. Felix, thanks for coming on the show.
Hi, Brian. Thanks for having me.
Now, perhaps, Felix, we can start by really going down to the basics and defining the broad types of insurance products that we need, namely general insurance, health insurance, life insurance, and savings and investment linked products. Now, perhaps we can start with general insurance, Felix, and perhaps you could define it in terms of what it is and why it's so straightforward.
So general insurance, usually covers the protection of assets. Sometimes it also covers the protection of your person, but it's not, really related to the person and life insurance type of coverage, right? So usually we're talking about, for example, for the home, there is the house owner type of policy. For the contents in the home, there's the householder policy. Then, what do you call that? For the car, there is the motor insurance, right? And then it's also something to look at, that one should consider personal accident type of policies. So these are usually the type of policies from general that we would be used to seeing.
And Felix, one of the things which makes it very straightforward today is actually the fact that because it's associated with insuring an asset, and because there's de-tariffication of the premiums, which means basically companies can compete and charge according to different pricing, whereas before it was all the same pricing. Today, basically, correct me if I'm wrong, we could just go to financial comparison sites, put in the values of our assets, and sort of get 5 or 6 different options. Is that the best way to go about this in terms of buying this general insurance?
Yeah, I think it depends on the type of policies. But if you're talking about motor insurance, for example, oh yes, it's very simple. And you're right, you can go to price comparison sites, and in fact, it can even be so-called end-to-end, right? You could so-called look for the comparison in terms of the pricing of the policy, right to subscribing and so-called getting your car road tax as well. So it can be very seamless for some of these general insurance policies.
Now, moving on to health insurance, which is an absolute must, given the fact that for the last 10 years in particular, annual healthcare inflation is running at double digits. Now, a lot of people say that's the first insurance policy you should actually get. But walk us through what we should be considering when buying our first medical insurance policy, or medical insurance policies for that matter.
Yeah. So medical insurance policy, let me just use another common term that is used is medical card. So medical card really is meant to cover you during the times that you are so-called hospitalized, right? Of course, there is some pre and post hospitalization coverage as well, but essentially it's to cover us when we are hospitalized. So the things that you need to look out for would be, firstly, this thing called room and board. So basically, how much room and board type of coverage are you looking for? For us, we would normally suggest try to look at 200 ringgit room and board, right? It's not necessary for you to go very high in terms of the room and board, simply because for most medical cards, what happens is during the time that you are hospitalized, you always have an option to take on a better room, if you like, a better room. Instead of a double room, you can always choose a single room as well. And what happens is during those days that you are actually hospitalized, all that happens is you just have to pay the difference in terms of the room and board, right? So room and board is the first so-called parameter that you have to consider. The second is this thing called the annual limit, right? So if you happen to have a very old medical card, then what you will find is that the annual limit could be somewhere between 100 to 150,000 annual limit. Now, in today's medical inflation environment that we find ourselves in, that seems a little bit low. So you should always aim for at least 1 million so-called annual limits, right? But there is another variable called the so-called lifetime limit. That means basically how much can you claim over the full life of the policy. Now, the best policies out there that we recommend are those that come with so-called no lifetime limit, right? So what it means is if you have an annual limit of 1 million, every year the 1 million limit gets refreshed, right?
Okay, that's
So
very
yeah,
important. Yeah.
yes, that's very important, right? Now, another piece of advice is this. Many people tend to default to their company benefits when it comes to the medical card. Now, while that is an option, that is definitely not something that we would recommend as a long-term strategy, right? Simply because people change jobs, right? And you will one day retire, right? Or you might find yourself moving from employment to entrepreneurship. You're going to be your own boss, right? So then what
Yes.
happens, right?
I
So
think that's happened to a lot of people where they've left
exactly,
very good jobs and then suddenly
yes,
the coverage level is completely different and then they're caught out
correct.
fully.
And not only that, Brian, we have this issue of the health condition. Uh, you know, it's not a surprise that as we age, that's when the medical conditions start creeping up, right? With our lifestyles and what they call that, all the type of food that we eat, right? So medical conditions tend to be a little bit more apparent as we age. So what's going to happen is that if we only want to look for our own personal medical card later on in life, then we might be prevented from doing so should we have any pre-existing condition at that juncture, right? So that's the reason why I totally agree with what you say. If you're looking for a first insurance policy, medical cards are definitely one of the highest that you should have on the list.
Now, the other thing that people talk about either in conjunction with their health insurance or a separate insurance for that matter is critical illness insurance, and that provides a lump sum payment to you or your beneficiaries upon diagnosis. Now, this can help during the long-term recovery and also to obviously cover any loss of income. Now, uh, what is there a rule of thumb, Felix, in terms of what we should be looking at insuring ourselves in terms of critical illness coverage?
Yeah, okay. So in the perfect scenario, right, you would be concerned about so-called covering yourself, just in case. Imagine if you, get diagnosed with a critical illness, there is that little chance that you might not be able to, get engaged in a meaningful employment or get gainfully employed thereafter, right? So what's going to happen is that you would want, the sum assured to be sufficient to cover you from that time until so-called either retirement or until we no longer are around. But there's a problem with that. And that problem is that it can take quite some time. So what it
And
means
that
is
could be
that
a
the sum
huge
assured,
sum that is required.
exactly, the sum assured could be really, really high, right? So how do you balance this requirement, right? So which is why if you talk about rule of thumb, right? Ideally, if you can set aside somewhere between 3 to 5 years of your so-called living expenses in your family's living expenses if they are dependent on you, right? 3 to 5 years, if you can, that's a good number, right? But again, having said that, there should be some minimums, I would say. And based on the value of the ringgit today, we think that somewhere around a 300,000 minimum sum assured for critical illness is not a bad starting point. But having said that, we don't want to find ourselves, facing a very high so-called insurance premium. So
Yeah.
that's the reason why, generally speaking, we would normally suggest, anywhere between 300,000 to a million ringgit sum assured for critical illness would be quite sufficient, right?
Okay.
Now, having said that, you brought up this point about payment upon diagnosis and all that. Now, there is also another type of critical illness policy that exists called the early critical illness, right? So what this means is that you don't only get paid at the point of a critical stage, right, or the so-called stage 3, stage 4, so-called last stage kind of situation, but even at the very early stage, a small sum, a small portion, I should say, of the sum assured can be paid to you. But having said that, you can already imagine that because the likelihood of payout for early critical illness insurance is quite high, so therefore those premiums can be quite expensive, right? So for us, we normally suggest that if you're still young, right, and if your so-called net worth or the assets that you have is not much, then you can consider having critical illness coverage. Otherwise, if you are already, quite old, or I should say, above 40, right, then you might want to
Okay.
consider sticking to the normal CI.
Okay. Now, let's move on to the next type of insurance, which is essentially, I think for many people, the most common insurance premium purchase, insurance policy purchase, especially among the older generation, a life insurance policy. Now, could you make the distinction between term life and whole life insurance policy, and also then tell us how much we should be buying for ourselves today?
Okay, so that's a good question. So basically, when it comes to life insurance, the payout will come upon a death scenario or what we call a total permanent disablement scenario, right? So the question then is this, right? Should something happen to you, right? If there is a death scenario, who are your dependents, right? You need to understand who your dependents are, and you need to ask the question, okay, how long will the dependents require this funds, right? So I give you an example. If the parent is thinking of buying a life insurance policy, and if the child is 10 years old, now I think we can safely say that the child probably will need, some kind of financial support until he or she attains the age of 24 or 25, right? Let's just call it 25. So if you're 10 years old, 25 is the so-called ripe age where you can be financially independent, right? So you have a 15-year tenure, right? So what it means to calculate how much you need would be what is the living expenses expected for the child, right? And obviously, since it's a child, you might have to consider, you know, tertiary education costs as well, right? So when you add all of this together, you will get what we call the required sum assured, right? Or your insurance needs, right? What's your insurance needs, right? Now, obviously, if you have already been working for quite some time, you might have accumulated assets, right?
Yes.
So what you should be doing is to take the insurance needs, right, and deduct your so-called net worth, right? If you deduct your net worth, what you would then have is the more realistic gap, right?
And
That
you
is
fund
the
it.
amount
Yeah.
that you have to fund. Exactly. You have to fund it with the life insurance policies. Now, as you've mentioned, there are so-called broadly a few types of insurance policies. One is the whole life policy. So whole life policy just means this, right? You determine the sum assured that you require, right? And then you purchase this type of policy, whole life policy, you will have so-called, in a sense, peace of mind that the premiums are going to be fixed, right, throughout the duration of the policy. right? Uh, but because of the nature of being a whole life policy where the sum assured is going to be so-called required for a very long period of time, the premiums tend to be a little bit higher,
And also it
right?
depends, it's age dependent, right?
Exactly, it's age dependent as well, right? And not forgetting, because whole life policies are very traditional in the sense that as a so-called person who's purchasing the life insurance policy and paying the premiums, you really don't care whatever the insurance company does with the money. All you're interested here is this, right? So long as I pay the premiums, should something happen, my so-called beneficiaries can take the life policy together with the death cert and make a claim. How the
Yes,
insurance company is able to fund that claim is of no consequence to you, right? So long as they
correct.
can, right? So because of that, the insurance company then takes on the responsibility of ensuring that the premiums are invested, right? And they can grow to be able to enable the insurance company to make that payout when the claim comes, right? So that's a whole life policy, right? Now, obviously, not everyone requires, the coverage right until the time that they die, at age 70 or, 80 or whatever that is. They might only require it for a limited period of time, right? Usually, when you are still actively working, right, at your prime working years, you might still need some kind of a coverage for your dependents should something happen to you, right?
That's
So
correct.
for those who have a limited period where they need that so-called little financial boost, right? Then a term life policy will be suitable. So you could have a term life policy, starting from 5 years. Many insurance companies have what they call a 5-year renewable term policy. So every 5 years, you can consider to renew the policy as well, right? Another example of a term policy, i.e. with a fixed period, is if you have a property, the bank will try and sell you an MRTA, mortgage reducing term assurance, right? So
Yes.
that one kind of mirrors the amortization of a housing loan, so that should something happen to you, right, your next of kin, your beneficiaries will be able to so-called get the property without an outstanding loan on it, right? So, that would be the difference between the whole life versus a term life policy. But because of the nature of the term life policy being a short period, right, where the cost of insurance kind of so-called mimics the premium cost, I should say, mimics the cost of insurance, which rises with age. So as a result, the premiums on term life policies tend to be cheaper relative to whole life policies.
Now, let's move on to something that agents love to sell policyholders: savings and investment linked insurance products. Now, what is the attraction of these policies to individuals?
Okay. So if you're talking about savings plans, I think the attraction for some people would be the mere fact that there is a limited savings period, right? Very often, what happens is you have to pay the premium for 6 years, for example, and then you have so-called a 30-year savings window or period where there is a small sum assured, right? But then you don't have to pay any more premium. So I think people are attracted to this so-called limited savings period, and by the mere fact of it being so-called savings in nature, people are attracted to that. However, there is a big issue with products such as these, and that is that the returns from these type of plans, if you look at the historical, returns from these type of plans, they don't tend to be very attractive, right?
Yes,
You're looking at, yeah, you're looking at
yes, a lot of
circa
people know
FD
that. Yes.
rates. Exactly, right? So you have to be careful, right? Because very often, in many scenarios, these savings plans will not make sense, right? Then there is the investment link, as you've rightly pointed out. Now, So investment link, as you can imagine, is a combination between the insurance kind of coverage, right, with an investment element, right? Now, in the past, people, didn't quite like the investment link because, they find that perhaps the premiums were a little bit high, or, people do say, if I want to go for insurance, I would just go for pure insurance and I'll do investments separately. Now, I agree with that. Having said that, nowadays, insurance companies have made investment linked policies quite attractive, right? And there are some appealing features of investment
Now,
linked
what are they?
policies.
Because obviously there's been a shift in the scenario now. Could you give
Yes.
us some of the features which make them
Okay.
now more interesting?
Yeah. So investment linked policies have a very flexible kind of structure. Flexible in the sense that if, for example, today you can't afford a very high premium, right? So for the little bit of premium that you pay, obviously your sum assured is not going to be very high. However, later on, should you feel that now your cash flow is better, and I can afford to put aside a higher amount, what you can do is you can just increase the sum assured, right? So that is one of the benefits. And you can add quite a number of riders on the investment linked policies as well. So you brought up the thing about critical illness. So critical illness is a common rider that you will find in investment linked policies. Medical cards are also a very common rider to have on investment linked policies. And of course, there are the payor benefits. So if something happens to you from a medical condition standpoint, then the insurance company, so-called, will be able to, I should say, come in to cover the cost of the premiums. So because of that flexibility, right, and because insurance companies are now so-called competing among themselves to come up with very attractive kind of packages. So what we have found is that investment linked policies do make sense for certain types of policies and certain people, right? So you really need to ensure that it is something that's suitable for you. However, just a quick word of caution about investment linked policies, because the premiums for investment policies are not actually fixed, right? So what it means is if the insurance company, right, does so-called projections, right, based on the cash value of the policies, and they do the projection, you might get, in fact, you should be receiving annual statements from the insurance company, and they will tell you what is the sustainability period for the policies. Now, if the insurance companies find that the sustainability is not going to be very long, then you might get a letter to encourage you, right, to increase the premiums, right? So jokingly, we always say you get a love letter from the insurance company
Okay.
telling you, I'm sorry, your premiums are not enough. Please pay more. So there is that little bit of a risk that your premiums could go up. And this is something that we have seen in the last 1 year or so for those who have the medical card type of investment linked policies, right? Investment linked policies with the medical card rider. They have actually received letters simply because of the increasing cost of medical, what do you call that, costs. Yeah.
Felix, one of the things that critics argue with these investment-linked policies is the fact that there's a huge commission element built into them. Uh, Critics would often say, as you correctly mentioned just now, to separate out the coverage or protection element and the investment element. Now, you have mentioned obviously that today there are policies that make it very attractive. But overall, what are your final thoughts in 2021 about this dilemma that most people have?
Okay. So I think uh, investment linked policies can be suitable for certain people in certain type of scenarios. So the bigger question here is this: as a consumer, you need to recognize what your insurance needs are, right? So that's the starting point. So we don't start from what kind of policies should you be purchasing, but what are your insurance needs? When you understand how much sum assured you require, then you look at your cash flow, right? And obviously, you also have to factor in your other financial goals because we don't want you to take every single excess of cash flow, right? Surplus, cash surplus on a monthly basis, just to use it to fund the purchase of insurance policies. It
And
doesn't make sense
unfortunately, that's what
either.
a lot of people are caught in.
Yes, correct, correct. So I think the idea here is this. Nowadays, there is a channel, a distribution channel, one which I am also part of, which is what we call the financial advisors representative channel. So we are Bank Negara licensed. And what happens is we represent multiple insurance companies. So we
Okay.
are able to give our clients an independent advice based on whatever the clients need, and then we so-called help them look for policies that suit their needs. So it can be a combination of term policies or whole life policies if required, or investment linked.
So is
But
this
because
something
we
like
are
a corporate broker, insurance broker? So now you, because you then represent many insurance companies, you basically tailor solutions for individual companies and your clients, and you're not restricted by ties to a single insurer. Is that the
correct,
case?
it works in a similar way. There is a type of license, an entity called an insurance broker, right? However, it's been quite some years where Bank Negara basically has now issued what we call a FAR, the Financial Advisors Representative License. And a company, a financial advisory firm that has such a license will be able to sign up with multiple providers. So our clients, get the benefit of is so-called choosing or at least shortlisting products from multiple providers. So then the clients are in a better position to choose so-called the best that's available in the market, rather than the best of only one company, which is going to be the case if you source your insurance products from an insurance agent, because they can only represent one
One
principal.
company. Yes, that's right.
Yes.
Felix, thank you
Yep.
very much for this insightful show that we've just done. We've been speaking to Felix Neoh, the Director of Financial Planning at Finwealth Management St. John Berhad, on BizTech's Personal Finance Show. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.